Traders, on this episode, we're going to be going over support and resistance and 3 tips that are going to help you with your profitability in your trading. And at the end, we're going to be going over some of the trades that were tossed out to our community, which are still running and also doing extremely well. So let's roll the intro.
All right, cool guys, what's up? Welcome back, folks, to the Kyler and Cleveland show. I'm Cleveland.
I'm Kyler.
And we wanted to talk to you guys today a little bit more about support and resistance. And we wanted to mention how this week is going along. It's already Thursday. U.S. market just opened up about 2 hours ago. And maybe we can also mention some of the positions that we got a chance to get into sometime this week. All right, so guys, look, if you're new to the channel, what's up, folks? Make sure you guys subscribe. We're happy to have you here. And if you like the video for your boys, we very much appreciate it. All right, so when it comes to support and resistance, right, usually retail traders, they maybe simplify it a bit, but not only do they oversimplify support and resistance, they also account on it way too much, right? They almost build their entire formula around, just use support and resistance. Like when you ask most retail guys about, hey, what's your trading strategy? They'll say, oh, I use a support and resistance trading strategy, supply and demand. And I was like, well, support and resistance is just one factor of the market, right? This isn't how you should build your entire business around support and resistance. It's pertinent. It's important for you to be able to assess what's happening when it comes to key levels, minor levels, and how time frame differences can affect those structures and how easily those structures can be penetrated or broken off of, right? Time frames, again, that's one of the tips that we're going to be talking about today. But key levels, again, is one factor of the market, and this is just what we want to say in terms of a precautionary stance, right? We are not saying that you can build a strategy on support and resistance, but you can definitely have your model operate around a very well-defined support and resistance ideology. You get what I'm saying?
Yeah, and I think a lot of people will just assume right when price hits the support and resistance level that, I want to start buying or selling, but there's other factors at play that you got to, utilize, maybe some other tools you got to utilize, but there's a lot more that you need to, to go into that trade.
Right, a lot more to account for. But the 3 things that we wanted to help you guys understand that we rationalize first in regards to how we look at support and resistance, that's what we're about to discuss, right? And so, number 1, we have to assess what's happening fundamentally. So when we take a look at our markets, fundamentals are our backbone. They're our bread and butter in regards to how we assess things and what we do first when it comes to trying to rationalize a directional move, right? Because when you're looking at a price chart, folks, what are you trying to do? You're trying to understand the directional move that markets are about to go to, right? You're thinking, okay, what are the more probabilistic areas that this market can run to based off of the infrastructure here, based off of potential, crossover sections, right? The London breakout session or the slowing down in the Asian session. But outside of that stuff, these are people moving markets, right? All of these candlesticks are happening and existing because people are putting orders in, and 97% of them are assessing what's happening from a fundamental basis. So when we pull out and look at things from a weekly standpoint, you'll see a lot more trending moves. Look at the consolidation we're in right now, but you see a lot more trending style moves because of different economic reforms and economic policies, political matters that are happening throughout markets. So for us to have a very solid rationalization of what's happening from a support and resistance standpoint, well, we have to understand where the market's going. So fundamentals, you can somewhat mix that in a little bit with market conditions, rationalizing, okay, what's the fundamentals at play right now, right? What's the underlying sentiment as to where this market's going? That's going to help me rationalize, is this market a trending market because so many people are buying the euro, maybe because they think that they're going to stop quantitative easing, right? This is a factor of support and resistance. Support and resistance is going to change based on what, again, is going on from an economic standpoint. You get what I'm saying? Like, what do you think on that subject?
Well, I think a lot of traders beginning will, they'll see some support and resistance maybe forming, but they, like you said, they don't understand the fundamentals behind it because it could obviously break through that level easily.
Exactly.
And they don't know there could be a level, maybe a different key level up higher that is going to be driven by a fundamental factor, and that's what's going to push it to that next level. So just because you may see a point forming of support or resistance, that doesn't mean it's guaranteed. It's obviously all based on market participants, market behavior, and what's going to drive it, and if it's going to drive it to that next level.
Right. So there's one thing you said. You said fundamentals could break the structure. Most people, when they're assessing support and resistance, they're trying to rationalize if the structure is going to do one or two things. Is it going to bounce or is it going to break? And again, fundamentals can help you rationalize that. So this is a good example. Back in 2018, this was actually one of our biggest trades in the community last year, was when all of that U.S. inflation came in. CPI numbers were off the charts, retail sales were going higher, and we were raising rates Q2, Q3 going crazy, right? Okay, well, this sell side move that you saw was tremendous, right? So this was $1.23 here on the Euro USD, and we didn't stop until $1.15. There was barely any support and resistance here. There was literally just sell side, sell side, sell side, sell side, right? So market conditions shifted so much based off of the underlying fundamentals that your ideology that you may have as to how you want to use support or resistance on a daily time frame, or how you want to use support or resistance on a weekly or a 4-hour, that's going to shift dramatically. Okay, so that's why it's so important for you to just stay in tune with what's happening from a fundamental perspective, so that way you can have a good idea as to how you can anticipate where markets are going to go. So that's our first thing. Like, fundamentals are always going to be the backbone, and then after that, we can start to dictate how we want to move, or how we want to anticipate price movement based on the technical analysis, based on the market structure, right? Okay, so fundamental analysis, number one. Number two, I would go along and start to say time frames, right? Whatever time frame you're on, well, that's going to be heavily dependent upon how strong or how weak those key levels are. Most people, if you were to say out of 100 traders, I always do this, out of 100 traders, how many traders are probably day trading?
Probably, I would say over 50%. Easily.
Right. I mean, 70 maybe. I mean, there's very little people. Most people are always wanting to day trade. They always want to be in and out of markets very, very quick. So can we say 75-25? Probably you're day trading.
Yeah.
All right. So the fact that you're day trading means, let's assume that you're playing on what's up, maybe the hourly, the 15-minute, the 30-minute,
5-minute,
5-minute on a many occasions.
Hopefully not the 1 minute.
Hopefully not the 1 minute. I haven't seen someone do a 1 minute in such a long time.
But
None of our guys have hit us with the 1 minute yet, but we have had a lot of 5 minutes and 10s and 15s and all that kind of stuff. But for example, right, this is the 1 hour time frame. This even looks to us a very, very interesting in regards to support and resistance. The support levels on the lower time frames, guys, if you're day trading, are very, I don't want to say misleading, but they're not strong. They're not structurally sound, right? Because if there's so much market randomness, and this gets into the market random theory and Levy flight and all these things, but when there's a lot of market randomness, what starts to happen? Your structures, your support and your resistance can get broken on a whim. There's no problem. Like, so what should someone do if they're trading on these lower time frames? They love their day trading. It's the best thing in the world to them. What can they do to be a little bit more safe and have a little bit more of a precautionary attempt to trade support and resistance, but still be on those lower time frames? Is there anything they can do?
Well, I guess for me, I would say, to have a set strategy and actually have an understanding of liquidity, since, on those lower time frames, you're going to be dealing with more liquidity and, like he said, noise and just market randomness. So really just like having an actual defined edge on those lower time frames. So it's definitely going to carry over into helping you be a more profitable day trader as well.
Exactly. So an edge on a lower time frame could be something like, maybe you have some type of pullback strategy where you're assessing on the higher time frames a market running to a certain level, and then you're assuming on those lower time frames, when you're looking, maybe you call it your entry time frame, maybe that's on the 5, maybe that's on the 30-minute, you're hoping for markets to retreat from that level. So you're looking at a major support level, you're hoping for markets on those intraday time frames to run to that level and then pull back in some sense, right? So strategy, structure, right, have a very, very thorough process as to how you attack the market again and again and again. Don't change the strategy. So we tell everybody in our academy, don't change your strategy. Our strategy works really, really well, okay? What you should do is refine the strategy. Okay, there could be 1 million traders. There's 1 million profitable traders. Well, I promise you, every single one of them are going to have a different strategy. But the difference is between the guys that are profitable and the guys that aren't. One of the key differences is that the guys that are profitable probably stuck to the same strategy month after month, year after year, and they made it better. They took a bad strategy. Every strategy starts off as a bad one, right? But they stayed with it, and it became something that worked for them.
Yeah, and they're learning the nuances of their system or strategy, just like any business would do. You got to learn the intricacies of it and the details of it, so you can, like he said, get better with it and better, understanding of it.
100%. So again, when it comes to support and resistance, make sure you guys are assessing what's happening fundamentally, so you can understand the market condition change. Are you in a trending market? Are you in a consolidated market? After that, assess what time frame you're even assessing markets on. Understand that the lower the time frame, the more randomness, the more noise, the less you should scrutinize those quote unquote support and resistance levels, because they're not going to be support and resistance for long on those lower time frames, right? And so then after that, number 3, what would you say the third thing that these guys need to look out for when it comes to, okay, this is my checklist, what's that third thing that could really help me use support and resistance to a whole nother level?
The third condition is going to be the size of the consolidation or the ranges. So usually whenever you get, a tighter consolidation or a tighter range, it's usually the bigger move out, or the move as like in a continuation in that direction you get, like similar to this euro at this $1.14 level, like that's a tight consolidation, and we get a pretty big continuation out of that.
Pop out of it. Yeah. I've always noticed that whenever you get these tighter consolidations, things that can be pretty, what you would think would be structures, but they're not really that well profound or pronounced structures. If you went to a higher time frame, they almost wouldn't even really be there, right? And so the second you get a move out, they're always extremely explosive. You can even see it right here in this price area, where again, you start to have your consolidation, and then you get a little fake out. And that's another thing. When you have these tighter ranges, you can usually see lots of fake outs happening, right? So that's another instance where you got to be very careful with what you dictate as a significant support and resistance area. If you consider this a resistance area and you get a breakout of it, and if you consider it to be a profound one, like one that's very, very well structured, well then if you get a breakout, you might start going in for a little breakout strategy when you're now buying, but all that happened was a larger range just came into existence, and then boom, you get a massive sell side move. So you got to be careful with playing these smaller consolidations, and you can just go in your charts, you can just look for them. You can see certain instances, like this is a very somewhat pronounced range, right? If we were to draw up some type of range structure here, for instance, let's see. And I actually like this one even more, but we'll stay focused over here, real quick. But notice this one. This is a very solid range, right? You can see lots of price action happening inside of it, and then you get a break out of it, and it's a little bit more of a thorough break. Now, was there a lot of sentiment behind that move? No, but since the range was already so pronounced, the break out of the range was a lot more consistent with an actual move, an actual momentous move. Here's another one that actually looks really good. That, again, the reason I like this range is because it's a little bit longer. Time took a while for markets to break out of the structure, right? So if you're looking at the market and if you're seeing markets create these type of opportunities where you're like, okay, wow, this is a lot of action, this is a lot of price action, you have a very pronounced range. This range is going from $1.17 all the way up into the $1.18. So this is a 100 pip range. Automatically, I'm really considering this a range for sure, right? On a 4 hour, I have a 100 pip range. It's taking a few days to expand. All that tells me is when I get a breakout, it might be a serious momentum breakout. And then you do get that momentum breakout. And these are the opportunities that we look for. And I mean, this is really one of the key elements to the way we trade our strategy, right? When we look for certain opportunities like that. So be careful with the size of the ranges. Be careful with the structures that you consider support and resistance. Definitely be careful if you're on the lower time frames, but you still need to be careful if you're on these 4 hour time frames. You're just looking at 4 or 5 or 6 candles and you're like, cool, support and resistance. Maybe not. Markets can easily run, break to the high, break to the low, and now you just got whipped all over the place because it wasn't significant enough. Right, you need significant consolidations for you to have the thesis to say, all right, this is something I can work with in regards to if I get a break out of there, it might really work out for me, or break above, whatever the strategy is or whatever the sentiment is in terms of where the market is actually going.
And I see that all the time. You can go on like lower time frames and you can definitely see like little consolidations and breaks. So if anyone wants to go and look at that, you can definitely go on like a lower time frame, but just don't trade on it.
100%. So I think that's it on support and resistance. If you guys got any questions for us still on that subject, we can make another video, or you can just comment down below. We'll be right there to answer away. I wanted to highlight real quick, again, some of the positions that we've been in this week, mostly called out by Kyler. Man, what are some of the trades that we were taking a look at? I'll pull it up here and let's just go through some of these. So this is inside of our community. What were some of the things that you're looking at?
Well, really, we were looking at the pound JPY, which was probably my favorite trade that we took. So we were just looking at, some of this yen strength. We have the custom indexes that we utilize, so we were able to see and predict, a lot of yen strength that was going to come into the market. And
we mentioned that was the highlighted trade for the week, where we mentioned, hey, we want yen strength. Actually, let's play that real quick. we'll play that quick snippet where I say, hey, yen strength, that's what we're looking for. That really came from Kyler's ideation over the weekend. Take a look at this. This is another situation where we may start to see this market turn around a bit. So overall, all right, we haven't really decided yet what currency pair we're going to play it on, but overall, we are looking for some JPY weakness. Now,
yep, and that's the follow through that we got. We got that yen strength that we were anticipating,
right?
And that was all due to our understanding of the fundamentals. Otherwise,
right.
We're just not going to execute. It doesn't make sense for us,
right?
And we ended up, getting down to our target. It smashed through that, and I think it's still even running a little further past it.
It is.
So,
yeah.
If you wanted to let your winners run, that would have been a good situation to do that in.
Right, 100%. And then you were in a pound. What is this? Oh, NZD JPY. It's almost the same thing. JPY strength.
Mm-hmm.
Okay.
The NZD JPY did push up a little higher, but it does look like it's going to continue.
Right. We had a little bit of NZD strength that came in today.
Yeah, that was due to that GDP number that came out.
Right. And then we had something else. What was this one? Oh, you had a Euro CHF one.
Yep, the Euro CHF too. Right.
Okay.
Right there
here.
too.
Okay. It's not loading up. There it is. Mm-hmm. All right. Now, what was happening? Oh, CHF strength. That was going insane. We had an insane amount of CHF strength.
And that was the same thing. We were looking at those indexes, that we utilize, and that's how we were able to just see that pure CHF strength that was coming into the market. And it ended up playing out very well.
And then here it is. Okay. Mm-hmm. No, that's sick. I think personally that there's still a lot more opportunity this week in regards
for the franc, I think.
For the franc, and the JPY surprisingly hasn't had that much of a buy. I mean, it's been a significant buy side move, but there's so much left in regards to how much more that can come back in that pair.
I definitely wouldn't be surprised if we do get a little retracement with that yen, but then a continuation higher. But like we always preach, that's going to be dependent on those fundamentals, which we're going to be paying attention to.
Yep. Dollar exploded this week. We can go over that real quick. I mean, to the sell side. Right, so we had a lot of sell side that came in on the dollar. Let's take a look at that real quick. Are we on it? Yep, we're here already.
And that was really due to, Powell came out and he kind of took that one rate hike off the table for 2019, which kind of, caught a lot of people off guard, I think. I know he was talking about it before, but then he ended up taking it off the table this time.
Here it is. So we saw dollar run to $1.1440 on the Euro USD. We're pulling back quite significantly. We've retraced pretty much the entire move almost. But all this did really was give us another area of price discovery. Yep. We may retrace that move back inside of that range. These are the type of opportunities that we're looking for. So we love this right now. I love that it retraced because a lot of folks that maybe missed out on that buy, we could see that push back to the upside. We've been looking at buys on this thing since $12.40 3 weeks ago, and it was, again, one of the highlighted trades on the weekly Forex analysis video. I could put that below in the description so you guys can take a look at it.
And I remember, you had that pending set, I think, at 12.50.
12.40, 12.48, 12.49. Outside of that, I'm not too sure else what we can see going on this week. Again, I do want to see a little bit more Japanese yen strength, but it's already Thursday. We might see a calming on Friday, but we still have a pretty good looking month ahead. We got one more week in March, and then after that, we'll be pulling over into Q2 2019. All right. So, guys, look, if you guys need anything, you got any questions, totally let us know. I feel like this was some pretty good knowledge that maybe they can use in regards to support and resistance. Also, we want to know what content you guys may want to see on the channel. Post down below exactly what it is, and we will crank out on it. All right. A lot of the videos we make are because of requests. All right. So during the off time, we're here in the office. We'll just come in here, crank something out for you guys real quick, and boom, you got it. All right. So let us know what that is. Comment down below, and we'll see you guys next week. Peace out.